Attendees are in listen-only mode.
Good afternoon, everybody, and welcome. We're just going to get started in one more minute as folks are still coming in. Thanks so much.
Okay, I think we're going to get started now. Good afternoon, everybody. This is Deputy Commissioner of Energy at DEEP, Vicki Hackett. I want to introduce, we have people from the Governor's Office, from the Department of Economic and Community Development, from the Connecticut Green Bank, Eversource, and UI, and we're all working together to coordinate on this outreach. And you know, we understand that this is an extraordinary time, and the public health challenges that we're all facing, as well as the economic challenges that you all are facing, are combining to create just an incredibly sort of stressful and uncertain situation. But we're going to work together so that we can get through this time. I want to recognize the clean energy businesses that have taken decades for us to build up here in Connecticut, including over 40,000 clean energy workers in energy efficiency, clean energy generation, alternative transportation, clean grid and storage, and clean fuels. We've reached out to over 2,000 contacts for these 3 webinars that we're hosting. They're generally going to be the same, although some information has developed since the webinar that we hosted on Friday, and the same may be true between today and tomorrow. So we are updating things accordingly. We really want to stress the most important thing is for people to get out and apply for the federal assistance right away, because there is a limited pool, and we anticipate that it will run out. So just running quickly through the agenda. First, we're going to have an update on COVID-19 from Nick Simmons from the Governor's Office with the status of the pandemic and impacts on unemployment insurance. Then we're going to have an update on state assistance from Tommy Hyde of DECD, who will discuss the state's bridge loan. Then Tommy and Brian Farnan from the Green Bank will talk about federal assistance, with a focus on the CARES Act and the Paycheck Protection Program. And then we'll do questions and answers, which will be moderated by Matt Masunis of the Green Bank. I wanted to let you all know also that probably early next week or late this week, we're going to release a survey to get more information on how your businesses are doing and how they're being impacted. And we'd really, you know, that's going to be really useful information as we all work our way through this time. So if you could, you know, do your best to respond to that when you see it. If you do have questions, please type them into the question box in the within the webinar so that we can respond to them at the end. And also we'll provide an email for Matt Masunis if you're having trouble with the question box. We're also recording the webinar to distribute to contractors later. So, and with that, I'm turning it over to Nick Simmons to give us an update on COVID-19. Thank you, everybody.
Hi, everyone. My name is Nick Simmons. I'm the governor's manager of strategic initiatives. Vicki, thank you for the intro, and to all of you for being here today and dialing in, and to Brian Garcia for organizing this great event. Next slide. So I just wanted to give an update on behalf of Governor Lamont. So currently we have 38, a little on the lower side of 3,800 laboratory confirmed cases of coronavirus in Connecticut. I think the number has actually gone up a little bit more, closer to the 5,000 range. But you can always check the latest updates online at ctgov.coronavirus, where we are continually putting up not just statistics about daily cases, but all of the resources available to you and all residents beyond just the business side of things, although that's there. But in addition to internet connections into schools, school closures, latest health updates and health requirements from the state. So you can always find pretty much everything you need there. You know, I don't think it should be a surprise to anybody paying attention to the news that we're not out of the woods yet, and that, you know, quite honestly, things over the next 10 days will probably be worse before they get better. But that's been part of projections for quite some time, and things that the state have been preparing for. I couldn't be more proud of my colleagues across the state, many of them on the call today, and so, you know, our plan in this unprecedented time remains, from an economic standpoint, just to continue to make sure that this is a V-shaped recovery, that we are, as much as possible, achieving as short as possible of a shutdown, cushioning the impact on businesses and the economy in that short period, and gearing us all up for a V-shaped recovery as things get back to normal, as opposed to a U-shaped recovery. And your help in that process is critical. You can go to the next slide. So I'd say on the front lines, I think the closest sort of shark to the boat remains the massive surge in unemployment insurance claims that we've gotten. It's really kind of unprecedented. To put into perspective, in all of 2019, the whole year, we got 180,000 claims, and then in the last 2 weeks, we had 220,000 claims in Connecticut. So that has put, to be candid, a strain on a system that is not built, hasn't been built in the past for that kind of usage. And so it's been an all hands on deck effort to try to support our team at the Department of Labor with everything from people power to software power to computing power. And so I'm proud of our team, and we're not out of the woods yet, but we are pushing very aggressively to try to shorten that backlog and make sure folks who need help get help ASAP. There have been a few changes that we'll talk about today. One to the unemployment process from a federal level is through the federal pandemic compensation that's added $600 and upwards of UI unemployment compensation for 13 weeks. So there's, in this part of things, there's really sort of a change to the compensation, a change to the length, and a change to the eligibility. So the $600 is the change to compensation. The length has been extended from 26 to 39 weeks, and eligibility has changed to increase those not traditionally eligible, like 1099 workers and the self-employed. Next slide. So on the eligibility side, who are eligible for the UI are traditional employees that have been terminated or reduction in hours. So now we're talking about the state side of things. So the 1099s apply to the federal level. At the state, at this time, our traditional employees, we having the level of benefits range from $15 to $649 a week. And so if you were to add in a federal compensation with state, your range could go from be 615 as the floor and 1,249 per week as the ceiling. And in Connecticut, what we're seeing is that on average, benefits are increasing from about $400 to $1,000 per week. Again, this on the Connecticut side, the only way to file, because we have closed so many of our job centers due to social distancing requirements. So you can file online at filectui.com. Next slide. So just a few other quick points here. There you do have options when it comes to unemployment for your employees. So one of the options is a temporary shutdown if you were in that situation. So if the individual has an employer registration ID number and you have a firm return to work date, then your application will be processed immediately. This obviously helps you and the state because without these things, being processed immediately is a huge help and allows you to skip that wait process. I also want to point out this shared work component. So if you don't want to, and which is obviously better for everybody to not actually lay people off, you do have the option to reduce hours by 60%. And in that case, UI will pay for most of the remainder, which includes that $600 and up. So that is another flexible option that you and businesses are able to take advantage of. And then, just two other things here. So there's also this experience rating concept, which is if employers have a high number of unemployed workers, you see an increase in payroll taxes right now under the current workings of the system. This is under review. Just really need to look at whether this makes sense and if it's something we can try to waive. So stay tuned for updates on that. And then, finally, we've waived the work search requirement for unemployment compensation. It's just an extraordinary time, and so we don't want folks to have to worry about this work search, whereas we really want to prioritize social distancing and still get people the means they need to be sufficient. So that is the update from the governor's side. Thanks again to this team, and Vicki, I'll pass it back over to you.
Hi, this is Matt. Let me just jump in because we received a question about unemployment insurance. We're asked, when do we anticipate unemployment insurance will be open for self-employed to file for the federal benefit? So I guess, do we have an answer on that now, or is that more of a question for follow-up?
Yeah, I think it would be a follow-up. I know that the IRS and the feds are working on this now to move this as quickly as possible. So why don't we follow up and see if we can get the latest estimate from the federal level.
All right, we'll save the question and we'll move on to our next presenter.
And I'm happy to jump in here, Vicki, if that's all right. Thanks, Nick, for everything, and to everyone who's come together to put this presentation on over the past weeks or so. Again, my name is Tommy Hyde. I work for the Department of Economic and Community Development here at the state of Connecticut. Next slide, Matt. So I'm sure many of you guys have seen that the state recently came out with a bridge loan program. This program was up to $75,000 with 0% interest for 12 months and the possibility of a 6-month extension. In the little under 3 days that the program was open, we had received over 5,000 applications, which again, I just want to hit the point home that, you know, if you have not applied yet for some of these federal programs, you know, now is the time to do that. Because we saw such a high demand for this product, we actually increased the overall amount from 25 million to 50 million. But unfortunately, even with the 50 million or the $25 million increase, we still had to shut it down, and it is no longer open. There has been some questions out there of whether or not the state will be reopening this. And at this time, we do not plan on reopening it. As I said, you know, we did increase the amount of money in it. But we would encourage everyone to take a look at both the PPP program and the EIDL program, which we will be talking about a little bit later. So if you're out there and you have submitted an application, I just want to let everyone know we did remove the 7-day deadline for the follow-up documentation. So if you've not submitted that yet and are nervous that the time has run out, note that we will still be accepting that documentation, and you should submit that via the confirmation email that you received after applying. And then, you know, obviously with the federal programs that are out there, you are allowed to get the state program and one or two of the federal programs. You know, we would encourage you, if you decide that one of the federal programs are better suited for you, make sure you get that money in the bank and are all set before you reach out to DECD and, you know, potentially cancel your loan if you no longer need it. We are working through the 5,000 applications and hoping to start sending money out as soon as possible. Next slide. So the CARES Act, which was passed now, not last Friday, but the Friday before that, does offer several protections for homeowners with federally backed mortgages. Servicers of mortgages are required to provide 180 days of mortgage forbearance to borrowers attesting to COVID-19 financial hardship. They have instituted a 60-day moratorium on foreclosure proceedings, foreclosure-related evictions, and foreclosure sales for federally backed mortgages. And this 60-day period began on March 18th. Additionally, they have provided credit protection to so homeowners' credit scores will not be affected after the fact. And then on the state side, on March 31st, Governor Lamont announced an agreement with over 50 credit unions and banks in Connecticut to offer mortgage relief to the state's residents and businesses who continue to face hardship due to COVID-19. Under the agreement, participating financial institutions for borrowers are offering mortgage payment forbearances of up to 90 days, which will allow homeowners to reduce or delay monthly mortgage payments. For at least 90 days, participating financial institutions will waive or refund mortgage-related late fees and other fees, including early CD withdrawals. Financial institutions will not start any foreclosure sales or evictions for 60 days. And late or missed payments, again, will not be shared with credit reporting agencies, and therefore your credit score will not be impacted by this. If you are currently leasing or renting your space, we would encourage you to reach out to your landlord and work directly with them if you need some sort of forbearance. And then, as we said in the beginning, more information and all this information can be found on both the governor's website and the Department of Banking website. Next slide, please. So the US DOL and the IRS have published guidance on the emergency paid sick family leave programs that are authorized in the Family First Act. The federal government is paying the cost of leave up to $500 and $200 a day for family leave. Employers of 500 or fewer employees are required to offer these programs. And these programs are good ways to keep workers employed while waiting for a PPP loan, which is something, again, Brian will talk about in a little bit. Additionally, cities and towns have announced relief and are required to offer eligible taxpayers either one of the following or both of the following. The first one is a 90-day deferment for any taxes on real property, personal property, or motor vehicles, or municipal water, sewer, and electric rates, charges, and assessments. or reduced interest on delinquent tax payments to property owners under certain conditions. So again, we would encourage you to reach out to your local municipality to see which one or both they're offering. And with that, I will turn it over to Brian Farnan, who is the General Counsel at the Connecticut Green Bank. Him and I will split the business provisions in the CARES Act.
Thank you so much, Tommy. And I definitely want to thank the Governor's Office, DEEP, and DECD. They've been so amazingly helpful. I can't stress that enough. So first off, the one positive is I wanted to point out that Homeland Security has deemed energy efficiency and renewable contractors as essential critical infrastructure workers. So I know there's so many hiccups right now with work, but at least that's one less hurdle you have to deal with. Next slide, please. And I want to talk about the CARES Act, which is called the Coronavirus Aid, Relief, and Economic Security Act. This is an unprecedented $2 trillion stimulus that was passed with bipartisan support 2 Fridays ago. Just quickly, it provides for direct payments to individuals for $1,200, $2,400 for married couples, and there's a loan. We're going to talk about the Small Business Debt Relief Program. That is a $349 million program designed to help small businesses stay open and provide a direct incentive for these small businesses to keep their workers on the payroll. And the SBA will forgive a portion of those loans, and we'll talk a little bit about that in a couple more slides. And we just, start with your relationship bank today. This is an opportunity where these funds will not last forever. So I think it is very key that you start this process today with your relationship bank or with your accountant, because, although we think there may potentially be additional funds that come into the Paycheck Protection Program, there's no guarantees of that. And the best possible course of action is to start today. So what can you use these loan proceeds for? First and foremost, think payroll costs. That's the compensation you're going to pay to your employees, the salary, the wages, the commissions. It could also be used for other things. Next slide. It could be used for other things such as, payment of vacation time, parental leave, group health care benefits, payment of any retirement benefit. Another thing is payments of interest on a mortgage obligation. So you're not paying the principal, but these payments can be used for the interest on a mortgage obligation. You can use the PPP program payments for rent and utilities. So one thing I would ask when you talk to your accountant, or you just think about how you run your books, think about how you can use these loan proceeds for when you're weighing decisions on how you want to pay your outstanding obligations through different potential cash sources you may have. Next slide. So who can apply? So basically, this is for small businesses. Think less than 500 employees. This includes sole proprietorships, independent contractors, self-employed, and certain private non-profit organizations. There's a live link in the slides where you can learn more on this too. Next slide. Okay, so how do you apply? So you can apply through an existing SBA lender, but again, we really have to stress, work through your relationship bank. We've actually even heard that because there's such a crunch to process these, that if you're not working through your relationship bank, you may get turned away from another bank. I'm not saying they would turn you away, but I've heard stories of that. So first and foremost, start with your relationship bank today to move this forward. Next slide. Here's a list of the PPL lenders. And the good news is these SBA lenders pretty much are all the major banks in Connecticut. So it would be almost unlikely if your relationship bank was not able to process a PPL application request. Next slide. All right. Oh, sorry about that. So loan details. Talk a little bit about that. So one of the greatest things about the Paycheck Protection Program is that a portion of the loan could actually be forgiven. And forgiven means you don't have to pay it back. And those funds would not have to be paid back if you use the payroll costs for certain things, such as, payroll costs, interest on mortgages, rent, and utilities. And you may ask, how can the loans be forgiven? So just to explain it a little further, the debt will be forgiven if it's used in the 8-week period following the loan for purposes such as payroll, rent, mortgage interest, or utility payments. However, any forgiveness will be reduced in proportion to any reduction in the number of employees as compared to the prior year, and any reductions in employee compensation greater than 25%. So such reductions can be offset by an employer. It's important to point out that those reductions could be offset by the employer if you do end up rehiring those employees or do upwardly adjusting those wages by June 30th, 2020. And another thing that's important to point out, like a lot of people may have 1 or 2 or 3 relationship banks. It's important to know that the loan terms will be the same for everyone. So it's not like Bank of America is going to have better terms than People's United Bank. It's an interest rate, it's a fixed rate at 1%, it matures in 2 years, and there's no collateral, no personal guarantee requirements, and there's no SBA small business fees, which is typical under your traditional SBA programs. Next slide, please. So, how do you self-certify? So basically, this process is meant to be easier than typically. So there's a self-certifying process. You look with the current economic uncertainty, you want to make this as simple as possible. And again, there's no double dipping with other funds that you could potentially use. Next slide. All right, and with this next slide on SBA economic injury disaster loans, I'm actually going to pass this back to Tommy to jump into this one.
Thanks, Brian. So Connecticut was actually the 3rd state in the nation to become eligible for the economic injury disaster loans. The EIDL have been available now for a few weeks, and as of last Friday, the SBA has processed about 139 loans worth $31.5 million. These loans are up to $2 million for both businesses and nonprofits, with a 3.75% interest rate for businesses and a 2.75% interest rate for nonprofits. There is the ability for the principal and interest deferment. There is the ability for principal and interest deferment, but it is at the administrator's discretion. So once you apply, the loan would go through the process, and then an administrator would reach out, and at that point, you can talk to them about potential principal and interest deferment. And similar to the other programs, they have relaxed many of the requirements to get the money out the door faster. For instance, there's no collateral requirement for anything under $200,000. Next slide, please. And then along with the EDIL, there is the ability for up to a $10,000 advance within 3 days of applying. And this advance is essentially turned into a grant after the fact. The grant may be used to keep employees on the payroll, to pay for sick leave, meet increased production costs due to supply chain disruption, or pay business obligations, including debts, rents, or mortgages. If you already applied for an EIDL, and when you applied, you did not have the option for up to the $10,000 advance, unfortunately, you're going to have to go in and reapply if you would like that advance. I've been told that they can kind of rectify the situation on their end, so there's no need to cancel one loan and once you reapply, but they'll be able to see it on their end. But this is a great program that does provide up to $10,000 of loan forgiveness or a grant. Next slide. So then a little bit, as Brian and I talked about earlier, we just threw this question in there because we thought a lot of folks might have it. If I get an EIDL or emergency economic injury grant, in the state program as well, the bridge loan, can I get a PPP loan as well? And the answer is yes. If you ultimately receive a PPP loan or refinance an EIDL into a PPP loan, any advance amount received under the Emergency Economic Injury Grant Program would be subtracted from the amount forgiven in the PPP, and you cannot use your EIDL for the same purposes as your PPP loan. For example, if you use your EIDL to cover payroll for certain workers in April, you cannot use the PPP for payroll for those same workers in April, although you could use it for payroll in March or for different workers in April. Next slide. And then some of the other programs that were in the CARES Act, first is a small business debt relief program, which will provide immediate relief to small businesses with non-disaster SBA loans, in particular 7A, 504, and microloans. Under it, SBA will cover all loan payments on these SBA loans, including principal, interest, and fees for 6 months. This relief will also be available to new borrowers who take out loans within 6 months of the president signing this bill into law. Another program is the Employee Retention Credit for employers subject to closure or experience economic hardship. This provision would provide a refundable payroll tax credit for 50% of wages paid by eligible employers to certain employees during the COVID-19 crisis. The credit is available to employers including nonprofits whose operations have been fully or partially suspended as a result of government order limiting commerce, travel, or group meetings. The credit is also provided to employers who have experienced a greater than 50% reduction in quarterly receipts measured on a year-over-year basis. Then there's the delay of payment of employer payroll taxes, which allows taxpayers to defer paying the employer portion of certain payroll taxes through the end of 2020, with all 2020 deferment amounts due in 2 equal installments, one at the end of 2021 and the other at the end of 2022. And then finally, there is counseling and training available for folks out there who need it. You know, if you need a business counselor to help guide you through this uncertain time, you can always turn to your local small business development center, women's business center, or SCORE mentorship. These resource partners and associations that represent them will receive additional funding to expand their reach and better support small business owners with counseling and up-to-date information regarding COVID-19. And they're currently working on a joint platform that consolidates information and resources related to COVID-19 in order to provide consistent, timely information to small businesses. Next slide. I think with that, we will open it up to any questions you may have at this time.
Thanks, Tommy, and thanks to all our presenters. Just as he said, we did receive a few questions during this, so I'll be posing those to our presenters. And if you're listening right now, you can either find the question box on your GoToWebinar screen, or if you're listening from a smartphone app, you may see it as a simple question mark icon that you could bring up, and that will send a question your way, our way. In the event that you're having any technical issues with seeing these boxes at all, I'll give you my email address so we could follow up either in real time or after this webinar to help address your questions the best we can with the information we have available to us. So my email address in the event that your chat log is not working is matt, matt.masunas, that's M-A-C-U-N-A-S, at ctgreenbank.com. That's Matt, matt.macunas at ctgreenbank.com. Our first question, I believe, came up during DECD's first set of slides when discussing the Bridge Assistance Program. Is there a list of banks that have entered into this agreement with the state? I think we did display a list of banks, but it was during the Payroll Protection Program segment. And is the mortgage just extended by 90 days, or will a balloon be due at the end of 90 days? So I'll open that up to any presenters that want to opine on that.
Well, on the 90 days, that isn't a balloon. I could tell you that. And then, sorry, Tom, I didn't mean to interrupt you.
No, go ahead. I was trying to find it. It sounds like you know, though, so I would defer to you on that.
Yeah, so there wouldn't be a balloon payment at the end for the deferral. You would just basically have additional payments added to the end of your term. So if you had 93 payments left, you're about now likely going to have 96 payments left at the same amount. But you will also be responsible likely for paying your escrow payments, or if you have taxes that are potentially due the town. So even though you may get a 90-day deferral, you'll still have to continue to pay your property taxes when they come due. Just a heads up.
Thanks, folks. Another one here. Our PPP application would include employee payroll and the business owner's net earnings of self-employment. Ergo, the owners are not W-2 employees of the business. Do we need to wait until April 10th to apply, since we can only submit one PPP application? And we'll let our presenters noodle on that for a moment, and I'll, on their behalf, give the caveat that we might not know all this information on situational and circumstantial items up front. We're doing what we can to interpret the federal guidance coming down as it's being simultaneously interpreted by the banks, as this is all very fluid. So I'll make sure that that question is reposed again if no one has any answers to it right now, just in case folks want to think about it first. And I've got another one. Since the self-employed's payroll is defined as the net earnings from self-employment, is that eligible for forgiveness?
You want to repeat that again, Matt?
Sure. Since the self-employed's payroll is defined, and this is from the same questioner, so there may be a reference here to the owner of the business being characterized as self-employed, but they also have employees under them. Since the self-employed's payroll is defined as the net earnings from self-employment, is that eligible for forgiveness?
I don't know. We'll have to check and get back to them.
Sure. Some of these questions are really right in line with what we've been reading about, not only from, say, like the Bloomberg's or Wall Street Journals of the world, but also the Hartford Courant, which is that there's been some implementation hiccups with something this big, this fast happening. For example, this question, we've applied 5 days ago, but have not received the money. When or how do we receive it? Do we have any input on that so far? And that would be
Is it specific for the PPP program?
10,000 that is supposed to be delivered in 3 days, and also the 2 weeks ago for the Connecticut SBA loan.
So for the EIDL one, which does offer the up to $10,000 forgiveness, I've been told that that's supposed to be in your account in 3 days. It might be 3 business days. So it sounds like you might have applied on a Friday, and over the weekend, maybe they weren't doing it. There is a small backlog with the EIDL, but they are staffed up, and that money should be coming to you quickly. So I don't know what the hiccups there, but we can definitely look into that. As far as the state bridge loan program, as I said, over 5,000 applications in 3 short days. We're doing everything we can on our end to get that money out the door as quickly as possible. But realistically, it is probably going to be a week or 2, maybe more, before that money gets out the door, depending on when you applied. So at this point, it is a first in, first out program. So the earlier you applied, potentially the quicker you will get your money. Hope that answers the question.
Thanks, Tommy. Please review the details of the emergency economic loan. And please let me, as the presenter, know if I need to backtrack any slides on that. That's the emergency economic loan.
Yep. So this is the EIDL loan. Again, the state was the third state in the country to get this. You can apply for it through the SBA website, the Connecticut SBA website. And these loans are up to $2 million for businesses and nonprofits. 3.75 interest for small businesses, 2.75 interest for nonprofits. Again, there's an ability for principal and interest deferment, but that is at the administrator's discretion. And they have relaxed many of the requirements. The $10,000 grant or advance up to it, and it's up to $10,000. So when you're applying, you would check, there's a box in there and you check off, I would like to receive up to $10,000. Again, that's supposed to be in your account within 3 days from what I've been told. If you've already applied and you did not see that, there was that option prior, basically prior to the CARES Act being passed, if you applied and you did not see that option for the up to $10,000 advance, you would have to go in and reapply again.
Much obliged. Thank you, Tommy. Many local banks don't have the PPP program yet. Is there a deadline when they need to have it available?
I'm not aware.
Okay. Go ahead, Brian. I was going to say the same thing. I'm not aware that it is a requirement. You have to be basically, if you already did SBA loans, you're kind of ahead of the game. And I believe they were coming out with a process to allow additional banks to sign on board as well. But as far as a mandate of all banks having to offer this, I don't believe that that's at this time. And, I'll defer to Brian if there's anything I missed.
No, that's right. And I know, for example, Bank of America has had some hiccups in their application process, and I have a colleague of mine that doesn't work for the Green Bank was explaining that that was one of their 2 relationship banks, and because Bank of America was having this hiccup, he ended up having to go to their other relationship bank. That would be kind of my suggestion, that if you're having trouble with one bank, if you have another relationship with another one, I would try that direction.
I'll follow on to there. One of the banks on our list, Savings Bank of Danbury, was called out as being one that was tried but being not out yet with the PPP. Is that a circumstance of the banks kind of coming up to speed or starting with their own borrowers? Is that a matter of we want people to apply to these as fast as possible, but maintain persistence in case it takes an extra 24, 48 hours, that sort of thing, for those local relationship banks to have that availability? I'm interpreting the question here, I suppose, looking for any other input. Brian, if you have any, if we presented a bank on our list, it was tried, and they don't have PPP yet.
I can jump in real quick here, Brian. So the list we got here was actually from the SBA. They provided it to us, and they had indicated which banks are eligible to give out these loans. I mean, that being said, this is a huge program that was created very quickly, and a lot of banks are probably taking a little bit of time because they want to just get it right. I believe the final guidance came out as of last Thursday, and banks weren't allowed to start opening up or receiving applications until Friday. So it's not, I don't know much about Danbury Bank, but some of these smaller institutions, it might take a little while for them to get up to speed and start providing these. That being said, whether or not you should wait for your specific bank to be up to speed or go to another bank, that we would encourage you to talk to your contacts at the bank and see how quickly they can get up to speed. And if it's a day or two, it might make sense to wait. But if not, and you do have those other relationships, we would encourage you to use those as well. And again, Brian, if I had missed or spoken incorrectly on anything, please feel free to let me know.
No, I think you're right. And no, that makes sense to me.
All right, another on the Paycheck Protection Program here. Can 1099 subcontractors be included in the payroll figures to determine the loan amount?
I don't think so, but that's not. But that's caveated with I don't believe so.
Thanks, Brady. That's all the questions I have in front of me. We'll leave it open for another couple minutes for folks to continue thinking and type any additional questions, such as the one I just received. Can the Paycheck Protection Program loan be 100% forgiven for a church's employees, or does a portion need to be paid back?
I don't know about you, Tommy. I've not done any due diligence on church PPA programs, so I wouldn't know the answer to that either. I don't see why nonprofits would be handled differently, but I don't know.
Yeah, and I guess the overall question maybe is that, can the loan be 100% forgiven if, you only use it for payroll? And I think some of those details are still working out. I think one of the, and this is changing daily, and I would encourage everyone to check out the Secretary of Treasury's website at the federal level. They actually have right on their homepage, it says information about PPP, and it actually has a ton of additional information that could potentially answer some of these questions. But I think they're thinking that you might not get reimbursed for the entire payroll cost, and then it might be around 75% based on need and overall forgiveness. Again, this was last week when I was reading information, so there might be additional guidance out since then. And I would encourage everyone, Secretary of Treasury's website, right on the first page, links you to all the, FAQs. There's actually an application on there that you can go on, fill out, and submit to your bank, etc.
Do we have the URL address for that Secretary of Treasury's website? I think that we might have linked to that on a previous slide and also in our follow-up email materials on this. But if anyone has that URL handy, we were just asked for that as well.
So home.treasury.gov is what I just typed. I just Googled U.S. Department of Treasury. It came up home.treasury.gov. And there is a red strip that goes right across the top of the page where it says for small businesses seeking direct relief from COVID-19, click here to learn more about the Paycheck Protection Program. Actually, since the last time I looked on it, there's about 6 more links than there were as of last week. So there's a ton of information on that website.
Thank you. Now, consistent with the spirit of community mindedness that these circumstances have put upon all of us, one of our attendees is helping answer another attendee's questions here. That when it comes to independent contractors, the instructions defining payroll should include the amounts paid to independent contractors. So for the PPP program, just double check those instructions. You may end up finding some of those circumstantial situational questions that you have answered in there. We'll give it another couple minutes just in case there's any additional questions. Tommy, on the EIDL loan, when applying online with the SBA, do you have a sense of about how long it takes to get approved on that? Is that the one where you reference 3 business days, or is that different?
So the grant is 3 business days. Sorry, I do know. I'm just trying to find it in my notes really quickly. Just give me 1 second. But I think it takes 1 second. So it takes about 5 days for the application to process, and then about 10 days for an individual administrator to make to review and make a determination before them reaching out to you. So about 2 weeks at this point. Again, though, the SBA has brought in, they were ready for this. They have a team that's processing these as fast as possible. And because Connecticut was one of the first states to be designated to receive this loan, we are a little bit ahead of the game. There is probably a small backlog, but they are working through it. And generally they said about two weeks-ish before someone will actually reach out and let you know what you qualify for.
Thank you. We'll leave it open another couple minutes just in case. All right, we aren't seeing any additional questions here. Again, I speak too soon. Can you just apply for the $10,000 without asking for an additional loan?
No, you can't get the 10,000 grant without the loan. It's my understanding.
I don't see further questions at the moment. I'll open it up for any of our panelists if they want to provide any closing remarks. Otherwise, you know, the economic health and well-being of this contractor base supporting Connecticut's energy efficiency and clean energy segments cannot be overstated in how we evaluate its importance, and we want to make sure that we continue to support your success with whatever resources we're made aware of or have cognizance over. So with that, we've been pleased to present to you this information. Is there a distinction of April 3rd and April 10th for the PPP application window? There is, and I believe the distinction is that April 10th, independent contractors and self-employed individuals can apply for and receive loans to cover their payroll and certain other expenses through existing SBA lenders. April 3rd is when it opened up to small businesses and sole proprietorships to receive loans to cover payroll and certain expenses. All right, any closing comments from any of our presenters?
Nope. Thank you so much, Tommy and DECD and Matt.
Thank you, DECD. Thank you, Connecticut Green Bank, Office of the Governor, and Department of Energy and Environmental Protection for offering this critical information at this critical time to a lot of folks who are critical in serving our communities. So thank you, everyone, and we'll be doing one more of these webinars tomorrow, noon time to 1 o'clock, same time. Thank you so much. Take care.